Hi, I'm going to do an end of night trade. Let me switch the computers on, tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. No shock today, I've got my dinner down my front and everything. But what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. If that sounds good, please click the little subscribe button, genuinely helps. And if you've got a query or a question, just drop it in the comments below. I genuinely answer every single one of them. And that is roughly what I've been doing today. I've been trading down in my other office all day and I've come home. It's now not long after 4. And I was reading through my emails and various other messages that I've been getting. But mainly I've been chatting with the guys in Telegram all day today. And we have a jolly old time of things. And the main subject was the DAX. So what I thought I would do, I would combine that subject of the DAX with a couple of questions that I've had on the email. And it's really about end of day trading. People who work 9 to 5 and they want to maybe put a couple of trades on as they come in from work. So what I'm going to do is I'm going to show you something that I do quite regular. And it is an end of day trading setup. It's not special, there's no secret formula to it. It's just literally reading a chart, getting in and getting out and getting a few quid. You know, the secret to day trading is exactly that, what I've just said, getting in and getting out. Set a couple of targets, realistic targets, don't swing for the fences. Get paid, get out. Do it once, twice maybe. That's it. And then you can spend the rest of the night, once you've put a little bit in the bank, looking at a swing trade. So you could look at your 4-hour candle and maybe sort of 8 o'clock at night as the 4-hour closes, which it does for me here in the UK. You can look to enter a longer term trade over a couple of days. But in the meantime, while you're analysing the charts, you pop a little trade on and make a little bit of money while you're working out what this swing trade is going to be. So what I'm going to do is I'm going to grab my coffee, fire up the computers, and I'm going to trade it for you. And hopefully we'll see a setup, and if there is, I'll do it real time in the moment, unlike these clowns.
You ding dong!
Give it to me again.
You ding dong!
Who probably couldn't trade to save their life. And if you are following them, ask them to do it in the moment. See how many of them will. Because me, I'll trade any product any day and I'll do it in front of you, as I do every day. Okay, so let me jump on the screens and see what we can find. Okay guys, so as I was saying in the intro, I'm asked constantly how to trade at the end of the night. Well, it's now 5:15, and believe it or not, between 5 and 6 is a good time to trade, because the big boys are just like you and I. They're doing a day job and they want to clear that desk down and go home. So if they've been day trading throughout the day, they're going to be shutting their positions off. So you can catch a good 10-15 pips at the end of the night. And I'm going to show you. So I'm going to pull on just a clean chart. Here it is here. Okay. And it's the DAX 30. And I'm going to show you how to trade it and why I'm going to trade it. And hopefully you'll see 10 to 15 pips live in front of you. Well, the first thing you want to be doing is looking out at your 4-hour to get a makeup of what's going on. Well, there's been a big drive up and it's now ranging. You can see the range quite here. And if you put your crosshair on, you can see it's pretty much at the top of that range. So that's a good indicator that it's going to be a bob place. And bob means bounce or break. So looking at it, the tails and the momentum looks like it's slowing down, small bodies. Okay, so this could be a bounce. Take it to your hourly just so you can have another look at it. And sure enough, there is the buy up. You can see it's been buying all day, but look at the tails, they're all at the top, showing signs of it pushing down. Excellent. So just your first visual look is telling you this is going down. Okay, so let's box in the price. Go back to your 4 hourly and let's put on a couple of solid lines. Well, I would put one there for the very reason that this cluster, because that's just like a bit of an apex. You know, there's only really a couple of touches, but you can see that's touched bang on it, but this is clustered right around that. So I know that's a good level. All right. I then want one at the bottom. And again, just move it up till you get multiple touches, kind of like so. They don't need to be pip perfect because the market is not pip perfect. All we're doing at this moment in time is boxing in the price. I just want to see an area where it might stall and an area it might get to. And I only want a little piece of that. Just a tiny, tiny piece of it. Okay. So the next thing we need to do is look for a logical bounce point if it's coming short. Well, straight away I can see it here. Okay. So I'm going to put a dotted line in there. And you can see why. See, it respected there, 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 there. Try to get there, there, and it's done it over there. So it's a logical point. Okay. Nice and simple. Okay. So now I've got a wide box and a little box. Okay. So if that comes down, there's going to be a reaction there. Is there enough room for me to get 10 to 15 pips? Well, there's 195 and that's 160. I think we can safely assume I can get 10 pips out of this. Okay. So that's all I need to do at this point. I'm then going to take it to a 15-minute. And again, I'm going to have a look at the makeup of the trade. Okay. There you are, from 6:30 this morning. This has pretty much been going up. Can't do that forever. All right. Something has to give. But now look at it. There was a meeting in Europe and a speech given, which gave that spike. It retraced. That has gone up, but it failed to break the high. And now it's moving down, and we've got long tails again showing downward pressure. Okay. So again, I am quite happy to think that I can go from there to there. So good so far. All right. So what we're going to do is we're now going to drop it into a 5-minute chart, just like so. And I'm going to put a moving average on, which is going to be an 8-period moving average, just like so. And what I was looking for, or what I am looking for rather, is the price to stay below the 8 and give me a trigger. Okay, so I'm happy anywhere around this area to enter. Okay, so what I'm going to do is I'm going to count the candles back 5. 1, 2, 3, 4, 5. All right, and I'm going to put in another little horizontal line underneath those 5. All right, 1, 2, 3, 4, 5. So why is the line there? Well, the reason I count 5 candles back is I'm looking for the lowest point over the last period of time, and I want the market to come to me. All right, I'm not going to chase the market. So of those 5 candles, this is the lowest point. The worry of the situation is the fact the price is now above the 8 EMA, and the rule is your entry point must be below the 8 EMA. Okay, so I'm happy to place 2 orders here, which I'm going to do right now. There. I'm going to put one in at 10, just like so, and then I'm going to put another order in next to it at 15, just like so. Okay, your stop, which I'll get onto in a second, is up here out the way. All right, now it looks brutal, and it is. All right, when you're day trading, your risk reward is always skewed. Doesn't matter which way you dress it up, it is always skewed. All right, the stop is only there as a safety net. That is all it's for. All right, it's got nothing to do with this trade whatsoever, because you should have a mental stop, and your mental stop is here around this area where this black line is. So maybe there's a few ticks above there. All right, that's your mental stop. What's the difference? Right, you heard me call the stop a safety net, and that's exactly what it is. That's all a hard stop is. You see, the markets spike regular. In fact, case in point, right there. Okay, and if you were going short for whatever reason, that would probably take you out because it moves quick. And you have to be very wary of the ATR in a market and the daily ATR, because a spike can do that. Wallop. This is set at around a 50 pip stop because it's roughly half of a daily ATR. But the mental side is here. And if I get it wrong catastrophically and it screams up and takes me out, well, it cost me 50 pips. So what? But I'm banking on this being right. Just like an acrobat in the circus who would use a safety net. You see, when they walk out onto a tightrope, they're not walking out thinking they're going to fall. They're walking out thinking they're going to walk that rope. And that net is only there in case they fall off. But their job is to walk that rope. And on the rare occasion that it happens, it's going to hurt them because they're going to fall quite a way. All right? But they'll have done it 1,000 times prior. And each time they've done it, they've built up some confidence, muscle mass or whatever, to enable them to do it again. Trading is the same, except our muscle mass is the profits that we take. And you build them up. And then if you get caught, well, you get caught. But the idea is you do not enter a trade unless you're pretty sure it's going to go in your favor. And normally you would see me open multiple positions. I have positions that will run for a long time. I get them in, get my 10, my 15, my 20, that has paid me, and I try and keep a couple of runners going. And those couple of runners end up offsetting any of the losses that I have. So I've built up a pot of money, if you like, to pay off the losses. Because I know straight away you'll have them go, oh no, the risk reward's screwed, that's rubbish, and that's one thing and another. Is it? Is it really? See, I might trade once or twice a day, and I don't lose that many times. You know, okay, when I do lose. But you probably lose more trading 10, 15 times in a day to try and catch your 3-to-1 winner. And if you added up your losses, they probably equal one of mine. Simple as that. Right, this is just triggered, and we're going to show you exactly what is going on. It was put into a safe area to enter the market. In other words, 5 candles, good place to put. The targeting is 15 pips, which is brushing the bottoms of here. And we have a target in the middle to pay us. As soon as that has been paid, you pull these into break even. Gets you safe. And the idea is it's just wallop. You are in, you are paid, job done. And just so we can see, there is the candle. If you look at the bottom of the page, it'll show you the date, which is the 18th of November today at 5:25. Okay, it's just so you can see that it's not one of these trading view things that's rolled back. Stupid way of trading. If you're gonna show the market being traded, do it this way. All right, put some skin in the game and trade in the moment, and then it can only be as fair as that. Now, I do have my own style of trading. I don't believe in tight stop losses, which is why I have a wide stop loss, but I do believe in risk management, and there is a difference. And my risk management is knowing that I have to reassess it when the price comes here if I have not already killed the trade. And if I reassess it and I believe I am wrong, you cut your losses. Simple as that. But I'm disciplined enough to do it. If I have stepped away from the computer, or I'm distracted for whatever reason, the hard stop that you saw me put in just above this line up here, that will take me out of the equation. So it means I can fight another day. Okay, but there we go. It's gone in, and I'll quickly, while it's trading, show you the makeup again. So I started out on a 4-hour. Okay, had a look at the bigger picture, and if you look at my stop, it is out of the noise, but it's not that far out of the market. All right, it's just a logical place where the stop needs to be. Okay, so what we've done is I've looked at that and I've identified that it's in a range, an extended range, because it's on a 4-hour chart. There it is there. And I've kind of worked out it's roughly at the top of that range, and my stop needed to be above the black line. Simple as that. Stop needs to be where the stop needs to be. Okay, I took it down into the hourly to get me my trading idea. Okay, and the trading idea is contain the price between 2 logical levels, which is these. Put in the next extreme, which is where I think the price can maybe probe to, which is here. And then look for an entry point between where the price is and this marker here. And what I'm looking for is 10 to 15 pips. All right, so as long as anywhere between these two areas I can get 10 to 15 pips, I'm good to go. That 10 to 15 pips came from looking at the 15-minute to see if it was running out of steam. Well, this section here told me it was, which then gave me sort of broad strokes as to where we're roughly going to enter the market. And that's because this is clustering here. We then needed to refine the entry, took it down onto a 5, did a candle count back, which gave me that entry point and then you just target 10 to 15 pips. Simple stuff. And it really is as simple as that, guys. And the idea behind it, like I said, was as long as the entry point is below the moving average, you're pretty much good to go. All right. And then you just wait. Simple as that. And it happens quite a lot this time of night. Now, I've not had to use any indicators at all to do this trade idea, apart from a moving average and support and resistance lines. And a lot of my trading that you see evolves around that very principle. You know, there are some little extra sort of secret sources, etc. And I do show it a lot in the Telegram group and on the Scruffy Squad videos that I do just for those guys. But essentially what you're looking at is what I do. The art of trading is reading the price. And this is where most traders fail, because they genuinely believe that there's a secret set of indicators that you look at, and that is your trigger, and that's going to make you rich. Doesn't quite work like that, guys. These clowns will let you believe that.
You ding dong!
But there's only one indicator that you need to be looking at, and it's price itself. You know, if you can learn to read the candlesticks and the price and understand the makeup of what's happening in front of you, you've got a good chance of succeeding. Because think of it this way: if there is a secret set of indicators or a special moving average cross, wouldn't somebody just plug a black box into the system and there'll be billionaires everywhere? They really would, because they would be bang on all the time. But there isn't, because an EA system are good, and I can point in the direction of a good guy who is a coder, and that's what he does. You know, there's a little chap, if you watch out for him, it's called Jared Goodwin, Transparent Trader. Check his channel out. He's a good guy. He's a coder, you know, an algorithmic trader, and for it to bring in mass amounts, he'll tell you himself it's going to have a drawdown, because every system does. Even my systems, what I use, have drawdown. The difference is I'm very good at reading a chart, you know, and that comes from being around the charts for over 15 years. You know, I don't need the indicators. I can work on levels, the price in front of me, and just use a basic moving average. I don't even need the moving average. I just use it as a barometer of price, just to give me a gauge as to where I need to enter. And what you're seeing is the fruits of that 15 years. You know, do I get it right all the time? No, I don't. You know, do I get it right more than 50%? Damn right I do. Do I get it right more than 60%? Damn right I do. In fact, my hit rate is north of 80%. But what you've got to remember is I don't trade that much. I am very patient, and I wait for the market to come to me, and then I trade it. I don't try and dip in and out of the markets all the time. If I did, I couldn't do it. I really couldn't. I know what I'm looking for in the charts, and I can recognize it. There are certain times of the day that are very good to trade, and they repeat over and over at the same time. You know, an hour before the London Open
is a good time to trade. An hour after the London Open is a good time to trade. You know, it's why the London breakout works. You don't trade the actual open, you trade after it. Just after lunch is a good time to trade. And what you're doing is you're lending yourself to the working day. Just before the London Open, you know, that hour before, you've got the overseas markets closing down as the European markets are opening up, which gives a flurry of activity very similar to what we're looking at right now. You then let the bigger boys play with the market, do whatever it is they have to do. Then you trade when the dust is settled. At lunchtime, it's a similar situation. The market's quieting down so you can read what's going on in the markets in a nice calm manner. Then these guys come back after lunch, start doing business again, and you've got some movement, you know. And then we come to this time of night where those guys who have been working all day are now getting out of their positions and shutting their desks down for the night and ready to go home. And then you capitalize on that. So all you've done is you've followed the big money around a good trading day. And it's as simple as that, guys. And that's pretty much how to make money. It's just letting the markets come to you and you waiting patiently for the setup to play out. Very, very simple. So here we are. I mean, it's still holding under the 8. It's hardly gone against us, you know, and it could just sit and tittle on. So what I'm going to do is, I've just heard Winky come through the front door, so I'm going to toddle off down into the kitchen, grab myself a coffee, and then I'll come back to you. Okay, so I'll catch you in a minute. And that was that. So let me have a little look. And there you go, guys. Simple setup. Yeah, second trade stopped me out, but this is real world trading. And the idea behind 2 entry points is, one, to pay me. That was the payday. And the secondary one was just to give me a little bit extra. In this instance, it turned round, took me out the equation. I could have left my stop at a higher point, probably going to turn round and come back. But the idea is very simple. If the market is to run away from me, there's no reason I can't re-enter the market. None whatsoever. And I would rather be stopped out and re-enter as the market turns round than sit in heat, especially at the end of the night. It's 6:10. So in the last hour, you've seen me make just on £55. Was it £55? Something like that? Let's have a look. 54.50, sorry. So you saw me make £54 just by a simple setup. And if you watch that setup, Yes, my stop was wide to start with, but the price hardly went against me, if any. So I could have had it tighter. It's just I'm used to having a wide stop, and I'm disciplined enough to kill a stop. So all in all, not too bad. But real world trading, guys, and that's what I was trying to show you. Okay, the basic premise of it is trade around a working day. Okay, and if you're looking to trade late at night as a day trader, it's kind of the only way to do it. All right, so I'm going to leave it there. The reason why I did the trade tonight is I was talking to the guys all day in the Telegram group, and we've been discussing the DAX all day, and I just wanted to show it, but also show it without all the indicators and everything that everybody seems to get hung up on. It's not about the indicators. Price is king. And when you're day trading, the secret is to get in and get out. All right, and hopefully have a runner. Didn't work on this occasion, but I did it safely and I profited. Can't be any better than that. So I'm going to enjoy the rest of the night. I'm going to have another coffee because Winky's on form, and wish you all well. Remember, do what you love and the money will follow. See you all on the next one.